we continue the conversation with Larry Culp and Scott Strazik, taking up Larry's role as CEO of GE Aerospace and the common heritage it will continue to share with GE Vernova after the spinoff.
We have a tremendous visibility, both with respect to our service business, which represents about 70% of our revenue, simply because the airlines are back well above 2019 activity levels, and they need us to support the engines that propel all of that traffic. And at the same time, they're looking to expand and modernize their fleets, both in single aisle and wide body configurations. So in order for a new plane today, a new engine probably isn't fulfilled until 2030. So we have tremendous demand potential, both in services and in new units. We need to make sure we're delivering profitably over the next several years.
I'm not sure how many people understand. I'm not sure I understood the extent of your defense contracting. I mean, a substantial portion, not a majority, but a substantial portion is defense. How does that figure into your future plans?
Well, our defense business, we talked about that this week with investors. We're going to call that segment Defense and Propulsion Technologies. That's a $9 billion business, primarily in defense, large position here in the U.S., particularly with rotorcraft. Think helicopters, the Apaches and the Blackhawks, in addition to combat fighter aircraft. And as those assets are being used with more frequency, we contribute to the readiness of those assets. And in turn, as our warfighters need more capability, be it in a rotorcraft or in a combat jet, that's where the next generation of GE Aerospace technology has a role to play.
As we look around the world right now, one of the things we hear repeatedly is the geopolitical risk has gone up substantially. We've got a ground war in Europe, we've got conflict in the Middle East, we've got issues with the South China Sea, we're not sure what's going on with Iran. As you look out, does that suggest to you that there's going to be a continuing rising tide on your defense contracting?
We believe so, David. Now, obviously, there's a little bit of political dysfunction relative to the budget currently in Washington. But what we shared with investors was very much that same geopolitical backdrop. Unfortunately, that may not get better before it gets more tense. And again, both here in the U.S. and around the world, our business supports the warfighter, in both configurations. And we know that there are advanced technologies that governments want to deploy or be ready to deploy over time. And that's where we're investing from an R&D perspective.
So, Larry, you and I have talked about it before. Every CEO, Scott and you, maybe your most important, most immediate task is allocating capital. Figuring out, do you keep it, do you invest it, do you return it back to shareholders? You made an announcement this week about returning to shareholders some capital. Give us a sense of why you made that decision.
Well, David, a lot of investors have been anticipating a significant excess capital position at GE Aerospace. And I love saying that because, again, it wasn't that long ago we were looking at a mountain of debt that we needed to knock down, and we did. But what we shared with investors was we think over the next 3 years, we probably have $34 to $36 billion of capital to allocate. We'll first tend to what we need to tend to from an operating perspective, organic investments, be it R&D, CapEx, or second order. But we're still going to have a tremendous amount of capital to deploy. And what we've said is we see 70 to 75% of that going back to shareholders by way of buybacks and dividends. The board just last week authorized a $15 billion stock buyback. That will leave 20 to 25% of our available free cash to reinvest inorganically. And I don't think we'll do a lot of big M&A to start, but you'll see us continue to do smaller bolt-ons that I think fortify our existing competitive positions.
I think a lot of people would hear that and say, well, that's really good news for the shareholders because they get more cash in their pocket that they can do with what they want. At the same time, it also indicates you don't see a lot of great investment opportunities out there for that capital, because if you did, you'd keep the capital and invest it.
Well, I think that we have reserved the right to explore those inorganic opportunities. But in many respects, David, the best investment that we can make is in GE Aerospace. And that's what you see with that capital allocation framework.
What about your capital allocation? What are you looking at, Scott?
A lot of organic growth opportunities. Again, when we think about the grid and the substantial modernization needed of the grid, we're going to invest substantially in capacity additions to do that. There is still new technology that needs to be advanced on things like direct air capture, things like small modular reactors and the grid software that's critical to the future. That's really our near-term priority, is really investing organically and positioning this business to grow. And as we do that, first things first, we'll then evaluate some of these other things over time.
You cannot talk about the future of the aviation business without talking about the future of aviation itself. And GE Aerospace VP of Engineering, Mohammed Ali, has some bold thoughts about what that future may hold.
Our purpose statement is we invent the future flight, lift people up, and bring them home safely. And we believe it starts with bringing people home safely, and that earns us the right to lift people up, which in turn earns us the right to invent the future of flight. I think RISE has this beautiful open fan technology. It has, which attracts all the attention and obviously a lot of the questions, but right behind that, hybrid-electric capable, state-of-the-art high-pressure temperature capability, high-pressure turbine capability that we are designing using state-of-the-art supercomputing. We are also at significant advances in materials that we are putting in there, and sustainable aviation fuel capable from day one.
This is a business that has really been built developing generational improvements in sustainability in jet engines over time. But we've often not referred to it as sustainability. We've really referred to it as efficiency. But every time a next generation aircraft comes forward, it's really the result of a next generation engine technology coming to market.
Scott, same question to you when it comes to power,
You bet.
technological development. What are you looking at? What is out there on the horizon for GE Vernova?
There's a lot of exciting things. Direct air capture, how do we manage carbon? We've got a prototype right now that's pulling carbon out of the air as we speak. Small modular reactor, 300 megawatt blocks of power that we'll commission this decade that we think can transform the nuclear industry. Robotics and inspection technology with our wind business that ensures that every blade that leaves our factory has been fully inspected to get quality right the first time. Grid software, our Grid OS, grid orchestration system, as we say it, to really help our customers deal with the complexities in the grid today as more folks put solar panels on their homes and charge EVs at night, and there's more bi-directional flows with electricity. All opportunities, so a long list.
Even as aerospace and energy separated GE, there is a deeply shared DNA going all the way back to Thomas Edison, a shared DNA none of the sister companies wants to give up.
We absolutely have shared heritage. And actually that shared heritage goes all the way back to Thomas Edison, who founded General Electric Company. And that shared heritage, there is a statement that's written at the entrance to many of our facilities, including our aerospace research facility, that says, that quote from Thomas Edison, that said, "I find what the world needs, and I go about inventing it." And that's exactly what we will be doing in GE Aerospace, and I am confident that that's what the GE Vernova team is going to be doing as well.
One thing I'd say about working at GE Vernova, you come to work every day, and you feel like you're in awe of history. We have 80,000 employees with these incredibly diverse backgrounds all around the world doing so many different things. This is the one thing we have in common. We're motivated by this purpose-built company of electrification and decarbonization. So that's what inspires us every day.
When I reflect on the last 5.5 years, it really has been about the team, David. Scott talked about what we take forward. We take a lot of technology forward, but this is an immensely talented, resilient, ambitious team that I couldn't be more proud of. Go back to 2018, there were a lot of people who wanted to give up on our company. We didn't. And there were a lot of folks that came into our boardroom and into the management ranks who understood just how good these businesses can be, how strong this team is day in, day out. We just needed a little bit of time to work through some of those issues. Scott and I know our companies go back to Edison. Right, a lot of us over time have studied the GE management playbook. Scott grew up in that environment. I grew up looking in from the outside. So we're proud of that history and everything that so many people have contributed to our company over time. We're the stewards of the business at this point in time. And even though we go forward as three, we'll share that brand, we'll share that DNA, and I'm sure Edison and everybody else looking down will be proud of what they see from these three businesses on an independent basis going forward.